This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. To another edition of 18 Minutes with 180 Markets. Copper. For those of you that aren't following the markets that closely, it goes higher and higher every single day. It seems to have busted through that $3 a pound mark and never looked back. But the reason is that there is a fundamental undersupply of copper, whether we look at it on a 6-month basis or 6-year basis. Well, with us today, we have Simon Pooley of Force Commodities. And Force is a near-term copper producer, and his company is getting ready to take advantage of this undersupply and massive growth. And with that introduction, Simon, welcome to 18 Minutes with 180 Markets.
Thank you very much, Greg. A pleasure to be here.
Hey, Simon, everybody has a story, but in your case, I think your story is especially apropos for a near-term commodity producer. Can you just talk to us a little bit about your background?
Sure, Greg. I guess I finished university at Macquarie in Sydney in 1985, and I guess my first decade, I was largely involved with diamond exploration in the Northern Territory. So I spent 10 years with a company called Ashton Mining Limited, and they held the Merlin Diamond Project on the eastern side of the Northern Territory. We discovered about 15 diamond-bearing kimberlite pipes. We then took that through feasibility, and we commenced mining towards the end of 1999. About that time, Rio Tinto decided to take out the company because Ashton held, I think it was 30% of the Argyle diamond mine. So Rio were trying to get their 30% back, and as a result, Ashton was swallowed up in Rio. So I stayed with Rio for another couple of years. I decided to get out of diamonds and go into gold and copper. And I started off with a company called Mineral Securities in about 2003. Mineral Securities shortly after that spun out a company called Copperco, which had a copper project northwest of Mount Isa. I spent 2 years there as the exploration manager, increasing the resource base. And then at that point, I was asked to step in as a role as general manager in exploration and business development. Through that process, we again took that copper project through to feasibility and built an SX-EW copper mine that produced copper cathode. Unfortunately, the GFC caught us badly at the end of 2008 with falling copper prices, and we were carrying a high debt level. So the company was put into administration. That mine is actually still producing copper, so that's gone on for another 12 years. However, my career path then changed. I got back into gold, and I started with a company called Millennium Minerals. Millennium had a gold project up in the East Pilbara near a township of Nullagine. There were reasonable amounts of mineral resources there, and again, I helped increase that resource base. I helped fund the project. We constructed it, and we built a 1.5 billion tonne per annum gold mine there that is actually still producing. So after that, I then took on a role with a company called Novo Resources Corp, and Novo are a Canadian listed junior. They pretty well started the conglomerate gold play up in the Pilbara. I was there as Chief Operating Officer until the end of 2008. So I've been contracting for the last 18 months, and then my now chairman, Jess Oram, called me up and he said, "Simon, I want you to join force as CEO. Come on in and help me try and save this company," because the company was in, I would say, dire straits. And I said, "Well, I'll come on board if we can bring in a decent project." And just at that time, we happened to see this one in Oman. We started looking at forward copper prices and copper price expectations, and we thought, "Yep, this looks good." So I've been on board now for 5 months. We've taken the company out of suspension, and we have been suspended for 10 months. We went into suspension in January this year. A, we didn't have any money. B, we didn't have any decent projects, and we really needed to change the management and the board. And that's what we did over the last 6 months. We put on 2 new board members, obviously changed out the managing director, and we also acquired the Oman Copper Project.
You know, Simon, I think that it's an incredible transformation actually in a very short amount of time for Force when you think about it. And I think that the key points are, your background, oozes of credibility, if you will, which is frankly, to the point what Force needs. You've taken a lot of projects from that pre-feasibility stage to production, which is no mean feat. You've done it a couple of times. You worked at Rio Tinto. So, you certainly are a man of your word, if you will, and that's really what we need. And as you said, maybe switching the conversation to Oman copper, for those of us that are not as familiar with Oman as a big copper exploration and producing region, can you just talk about Oman, please?
Sure. I mean, it's probably got one of the richest, what we call ophiolite belts in the world. Now, ophiolite is basically some old preserved seafloor, and there tends to be what we call very high grade volcanogenic massive sulfide deposits located within that region. Now, copper's been mined in Oman for over 100 years. And in fact, probably over 1,000 years. The types of copper deposits you get over there, as I said, are fairly modest in size, but they tend to be between 1% and 5% copper. And they're characterized, geologically speaking, as what we call Cypress-style VMS deposits. They tend to also have a little bit of zinc, and they also have a little bit of gold. So in the interests that we have acquired through the acquisition of the Omani Copper Project, we have 2 JORC compliant copper resources. They amount to a fairly modest, just under 1 million tonnes at about 3.4% copper. Most of the copper sits within one deposit called Mahab 4, and the other one, Mackle South, contains the remainder.
And also with those projects, and one of the things that you're very focused on is a very short runway from exploration into production. Can you just talk a little bit about that path again, please?
Okay, so what we intend to do is see if we're going to define a scoping level study on these 2 known copper deposits. The scoping study is going to concentrate around potentially toll treatment as the quickest way to exploit the 2 deposits and produce a copper con that we can sell. They currently do not have sufficient resources to warrant a standalone plant and the capital that would have to go into a standalone plant. So the strategy is going to be twofold here. Firstly, we're going to look at a scoping level study initially on toll treatment, and there is a plant close by within 85 kilometres. We are also going to look at how we can increase that resource base. So whether that's through organic exploration that we have in available to us in blocks 4 and blocks 5, or regional consolidation and further acquisition of copper deposits that are actually sitting there and not being exploited outside of those various blocks. We have tenement applications around what we call Block 10. Block 10 sits a little bit further to the central part of Oman, still within the ophiolite belt, and there are known deposits out there that we will commence, engagement with the owners of Block 10 in a fairly short space of time. Similarly, further to the south of our Block 5, there's a block called Block 7, and it's fairly simple nomenclature in Oman. It's, Block 1, 2, and 3.
I get that impression.
And again, there are unexploited VMS deposits down there. So if we can increase the resource base, which I'm hoping to do over the next 6 months, whether that's organically or through acquisition, if we can get up to a certain point, then we can look at the feasibility of putting in our own mill and building our own copper concentrator. And the cost of that is about it's about $130 million. So in the short term, it will be focus on the toll treatment option with the view to looking at further acquisitions as an overall corporate strategy for Oman. Yeah, just wanted to tell you a little bit more about Oman itself. Oman is Middle East. It's Arabic speaking, but the majority of people who live and work in Oman do speak English and do speak English very well. Oman is a low-cost jurisdiction. It's very much a mining-friendly jurisdiction. The Omani government just recently changed the mining law in Oman, and they did that to try and attract more foreign investment. So they've made it a lot easier, and in a lot of respects, it's very similar to the mining law that we see here in Australia. And within Australia, we know that there's slight differences between states as to what we do and how we do it and the process of doing it. It's not that dissimilar in Oman. So you have a tenement, much like an exploration license that you've got over here, and if you wish to exploit something, whatever commodity that might be, you have to apply for a mining lease. You have to go through the rigors of environmental permitting, and it's very much the same here. It's not like a lot of areas of Africa that you don't have to do a lot of those things. Importantly, if you're working overseas, you need to make sure that the tenure is secure. And we went through a very rigorous due diligence process prior to signing up on this deal to make sure that we did have sound tenure. I've seen numerous circumstances in Africa where people have gone and spent money, and they've only to find out maybe a year later that the tenure isn't theirs. So in that respect, we're very comfortable with our tenure position. As I said, it's a mining-friendly, low-cost jurisdiction. Cost of fuel is cheap. Cost of power is cheap. Power articulation is all over the place. There's power lines going everywhere. There's roads, sealed roads, good food. It's a very comfortable country, I think, to work in.
Yeah, very strong infrastructure. And again, it sounds like there are a number of, whether you call it Block 1, Block 2, Block 3, and so forth and so on, but there are a number of acquisition targets or a role, from a strategy point of view, a number of assets that you can roll up and really, as you said, build up that resource base. And then can you also just touch on one of the things that you've learned is obviously in your history is how to bring a project to production, because it's all well and good, but in case you can get, make some money off of it, it doesn't really matter at the end of the day. Can you just talk about the path to production?
Sure. Look, it's a fairly well-trodden path, and I think the key with getting anything through to production is just be patient and go through the process. And often the most frustrating aspects of that is the approvals process. And as I said earlier, essentially it's the same process that we would normally follow here in Australia. So we would go through a scoping level study fairly quickly. That basically gives us an accuracy of about 50%. You would then take it through to a pre-feasibility study, and with it, if we're looking at a toll treatment option, we're not actually constructing a plant. We're just mining the ore and trucking the ore and delivering it to the mill. So that pre-feasibility study stage is very quick. And then you go straight through to feasibility study. And that process, looking at a toll treatment option, shouldn't take any more than 12 months. We're most fortunate with these tenements in Oman that we have all the environmental approvals. We have the mining lease applications just about to be granted. And these are the things that actually take a lot of time. So the mining lease application and the environmental approvals take an enormous amount of time. So if you're putting together or you're intending to build a standalone operation, you really have to allow 2 years to do that. When we built the gold mine in the East Pilbara at Millennium, we actually got into production in 3 years. So that was pretty quick. And that's where it's pretty quick relatively, but that's where your patience has to come in. And you've also got to maintain a good news flow to keep the investors comfortable that everything's going to go ahead. So you really need to maintain your exploration, obviously, which is a money drain during that process because you're trying to save every penny to go into the construction and the production phase. But it's extremely important to do it. So that's one of the challenges. So it's not just being patient. You've really got to keep your shareholder base very happy and keep coming out with good news flow. And you do that by increasing your resources, by being out there and drilling.
Absolutely. And would you say that, some of the key, speaking of that, in your mind, would the definition of success, let's just call over the next over 2021, would that be in relation to increasing the resource, and also I suppose that the mining lease, would those be key events, would you say, over the next 12 months?
Yeah, absolutely. We're holding off at the moment the granting of the mining leases because once they're granted, they carry quite a cost. So the steps that we would try and hit are, firstly, complete the scoping study. Let's see if we can have some wins along the acquisition path, and I believe we can. And then let's get through to pre-feasibility. And I've said to the market a number of weeks ago now that we were looking to complete the scoping study by March and have the pre-feas under our belts by the end of June next year. And in addition to that, we're also hoping to have some further acquisitions as part of that consolidation strategy there. So we'll also see what exploration turns up for us. We've got a lot of work going into the database that we received when we purchased the Oman project. It's a lot of good quality data. There's, you know, over 100,000 meters of drilling in that data set. There's a lot of geophysical information that we're assessing, and that should generate a prospectivity map for us, which will allow us to immediately go in and target with drilling.
Absolutely. So it sounds like there really is what I like is there's a clear path to production. You have a very clear strategy in place.
Yes.
You know, this is not also something that's going to take years and years and years, and there's nothing wrong with that per se, but this is more, I mean, I suppose in the ideal scenario, at some point, you know, you start to generate some cash flow over a couple of years or so, and that helps, you know, keep the momentum going. You can do more acquisitions and do more exploring and so forth and so on. And it sounds like that's your background of it as well.
That's precisely what we're trying to do, Greg. We want to obviously generate an income stream as soon as possible. That income stream will then support further exploration and further acquisition. We have to do it this way because we've only got fairly modest resources, and we don't want to be in a position that we have to do 3 years or 4 years of exploration work before we get something that's big enough then to decide on. You know, that really is it for the Oman strategy, but it's very much the same strategy for what we're trying to do here in Australia. So we are on the hunt for a gold project that is at an advanced stage, and by being at an advanced stage, I mean that it's on a granted mining lease. It only needs to have 30,000 ounces as a minimum of contained gold in it, preferably, you know, 60, 70, 100,000 ounces. And what we would do then is, you know, complete the approval process. So minimum approval process, complete any minor drilling that would have to happen, and toll treat and get it into production. There are gold mills all over the place here in WA, and you know, I probably see 10 projects a week across my desk. Most of them are fairly greenfield, but we are definitely looking for those brownfield projects. The greenfield ones will take too long. And the other thing that we are certainly finding is that as the gold price continues to climb or maintains its current level, the cost of these projects are getting even more expensive. So maybe a project that has 2 exploration licenses, no mining leases, 3 or 4 drill intercepts, commanding, you know, $1 million. Yeah, and it's difficult to justify paying that sort of money for something that's so high risk and greenfield. So those projects that we want are about. You know, I've seen some ridiculous deals done over the last 4 or 5 months. I saw a company recently paid $20 million for 100,000 ounces of gold that's contained within the ground at depth. You know, they're just silly deals, but they're about and they're happening.
Absolutely. Well, we're counting on you, I suppose, to keep discipline, because a lot of times what it matters is the price you pay, not necessarily. You can have a fantastic asset, but if you overpay, obviously that can end in tears as well. Simon, we try to keep these things short. Is there any closing thoughts you want to have for the audience, please?
Look, we're going to do what we say, essentially, Greg. You know, in this sort of industry, you've got to be adaptable. You've got to change with the times. We are very comfortable that we are focusing on the right commodities, being copper and gold. In your opening remarks, I definitely agree that the copper is going to be the place to be, the space to be, in 2021 and 2022. I just did a little bit of research this morning and it just came up with some very interesting statistics on copper. And I'll be quite brief here, Greg. 3.6 tons of copper for every megawatt of wind power. That's a huge amount. 4.5 tons of copper for every megawatt of photovoltaic solar power. So it's interesting. There's 4 times as much copper in an electric car than a normal combustion engine.
Wow.
So copper's going to stay around for a while. So yeah.
Great. Thank you, and definitely stay in touch, Simon.
Yep. Thanks very much, Greg.
Bye-bye.
A pleasure.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.